most recognized brand in fast food. And in the NNN investing world, a corporate guaranteed McDonald's ground lease is considered one of the safest income streams you can buy. The corporate credit is S&P BBB+. The lease terms are 20 years, and the ground lease structure means you own land that a global company is paying rent on. Here's exactly what a McDonald's NNN investment looks like and what you need to watch for. McDonald's deal structure split into two categories. Ground leases, which are the standard and preferred structure, trade at 4.75% to 5.5% cap rates for corporate guaranteed deals. BTS NNN deals, where the investor owns the building, trade 5.25% to entry prices range from $2.5 million to $6 million plus. Buildings are 4,000 to 4,500 square feet on 0.5 to 1 acre of land. The 20-year initial lease term with multiple 5-year options creates long-duration income visibility. S&P rates McDonald's Corporation at BBB+, Moody's at A2, one of the strongest credits in all of retail net lease. McDonald's generates $25 billion in annual revenue with 90% plus of its U.S. stores franchisee operated, but that doesn't mean you're getting a franchisee guarantee. McDonald's NNN is as close as you get to institutional grade passive income in commercial real estate. The 20-year corporate lease on a signalized corner from one of the most recognized companies on earth is simply about as safe as income gets. The ground lease structure means you're holding land, no building depreciation, no roof expenses, no structural issues. McDonald's owns the building and everything in it. Your role is to collect rent from McDonald's USA, LLC, for 20 years. From an investment strategy perspective, McDonald's is a defensive allocation. You're not buying for growth or yield maximization. You're buying for income certainty and real estate preservation. McDonald's strongly prefers the ground lease structure. They want to own their building improvements rather than pay above market rent on a building they don't control. In a ground lease, you own the land, McDonald's builds and owns the building, and you collect rent guaranteed by McDonald's USA, LLC, not by a franchisee. This matters enormously. The corporate guarantee from McDonald's versus a franchisee guarantee can represent a dramatic difference in credit quality and cap rate. Rent bumps are commonly 7% to 10% every 5 years. When McDonald's lease expires or they exit, the building improvements often revert to the landowner, meaning you ultimately get the building too, though that's decades down the road. 4 things to watch with McDonald's NNN. First and most important, verify whether the guarantee is corporate or franchisee. A McDonald's NNN with a McDonald's USA corporate guarantee trades at 4.75% to 5.5%. A McDonald's with a franchisee guarantee trades wider, sometimes significantly wider, depending on the franchisee's credit. These look the same from the outside, but are very different investments. Second, the ground lease structure limits your depreciation benefits since you're holding land, not a depreciable asset. Consult your CPA before closing. Third, most premium McDonald's sites are already owned by institutional REITs and long-term private holders. When one hits the market, it's usually for a reason. Understand why the seller is exiting. Fourth, tight cap rates mean limited current yield. You're paying for safety and long-term value, not income maximization. McDonald's ground lease, NNN, is one of the most sought-after assets in commercial real estate, and good deals move fast. If you're a Florida buyer looking for corporate guaranteed McDonald's NNN properties, I want to hear from you before you need it, not when you're under timeline pressure. I'm Ryan Solberg with MaxLife Commercial. Visit maxlifedevelopment.com or call 321-586-2121.